Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. And, I was just telling my subscribers, look, if you just woke up from a coma and you were a trader and somebody threw this chart in front of you, you'd say, well, bulls are at it again. If you clear this high from yesterday up in the 89s, the squeeze lives above 90. The bears have already got that, oh, here we go again feeling. The here we go again feeling morphs into it's not going to happen to me again this time feeling. I'm not getting squeezed. And that's when they all bail out, and that's when you get the squeeze and we head higher. If you exceed 90, it's very difficult for me to say that we're not going to go to the upper band. We're not overbought. We're just not. We spent yesterday grinding around. That worked off a lot of energy. We just got done retracing it over 100 handles from up to 2110 down to 1998. And, have the bears laid down? Yes. That was the impact of giving up all of that ground on Monday. Monthly pivot, 3 exponential moving averages, weekly pivot, mid-band. All of these things have been just given up by the bears. So, and they're paying the price for that. Now, yesterday was an interesting day. The dip buyers showed up right when they're supposed to, anywhere between 10:30 in the morning, but the bears couldn't really sustain the trade. It turned into kind of a tired market yesterday. It continued to gravitate back into that 77 area, and, bulls made a couple of good runs that they just couldn't maintain. What happened yesterday, though, was the bears didn't make really any good runs past the morning dip. They made a little noise down in the 76s. That's really all they could muster. The July monthly pivot, and we track, I track monthly pivots for longer than the particular month they're in because they tend to be important, okay? What we're seeing is you've got the July monthly pivot at 74.5, and they can't break that area. They never even touched my proprietary lower level yesterday. We came down, we got the dip. They pushed it higher, and then we just basically ground it out here. This is yesterday afternoon. It was a mess to trade. We didn't do much, okay? What we've seen in the overnight is a push back up to the August monthly pivot at 86. They tried to knock it down into the Europe Open, but the 77 area held again, and now it's made a higher high. So if there was a day that the bulls were going to take this to another level on a Friday in, what's not a holiday market just yet, but it's thinner, they've got an opportunity to do that. So the bulls are in control. Make no mistake about it. Make no mistake about it. It has been a week where if you fought this tape, if you got in your head that you wanted to be bearish just because, you've had a very difficult week. Don't have difficult weeks. Understand that when things like Monday happen and it gives up that many levels, there are consequences to that trade. And the consequences are the bears have to eat it for the rest of the week pretty much. So let's see if that continues to play out. The ideal bear scenario would be to make a high this morning that got rejected. You get back below, but it's got to get below 77 and it's got to get below 74 before they're really even beginning to make a dent in all the damage that's been inflicted on them. All right. Everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back Monday morning with another webcast. Trade them well, everybody.